Last week, the markets took a hit, and not just in tech. News broke that Michael Burry, the legendary investor who shorted the housing market back in 2007, featured in the movie The Big Short. Well, his 13F quarterly filing got released, showing that he had placed massive short bets via put options against NVIDIA and Palantir. He was shorting the big AI names. This sent shockwaves through corners of Wall Street, and some investors panicked, sending renewed fears that this may be an AI-fueled bubble. The NASDAQ tumbled through what has been its worst week since President Trump's Liberation Day tariff shock back in April. But the ripple effects didn't stop the AI giants. That sell-off, as does happen, spread across the very sectors powering the AI revolution, and that includes nuclear energy. Pre-revenue names like Lightbridge, ticker LTBR, dropped 30%. Small modular reactor developer Oklo gave back nearly 20%. Even though it is still up close to 600% on the year. Even the uranium heavyweight Cameco fell more than 10% as traders locked in profits. Now, here's the key point. This was not a fundamental collapse. It wasn't about the long-term prospects of nuclear. It wasn't about the demand for power. It was a technical correction. It was triggered by scared traders, profit-taking, fear of overvaluation, not by any change in the underlying story. In fact, the long-term data paints a much different picture. AI data centers already consume 4.5% of America's electricity. By 2030, that number could climb as high as 20%. That is an exponential increase, and there is no way to power that kind of growth without nuclear energy. Right now, we are witnessing one of the fastest infrastructure build-outs in U.S. history and what could be the biggest investing opportunity of a lifetime. Now, the United States has over 5,400 data centers. That is more than every other major country combined. And this wave is not slowing down. There are $40 billion worth of new data centers currently under construction. That's up more than 400% since 2022. This isn't just about more servers or faster chips. This is the foundation of a new global economy, one that will be powered by artificial intelligence and the energy needed to sustain it. So what happens next? Well, let's go ahead and break that down. Now, the true scale of this boom became clear in early 2024. For the first time ever, the value of U.S. data centers under construction exceeded construction of office buildings. Now, think about that. For decades, offices have defined commercial real estate. They represented corporate power, productivity, wealth creation, and now that symbol is changing. Just 3 years ago, data centers were only 1/7 the size of the office market, and today they're on track to surpass it. This is not a normal business cycle. It is a modern-day gold rush, but instead of gold, it's data. Now let's rewind to November 2022, the month ChatGPT launched. Since that moment, data center construction in the U.S. has tripled, surging from $12 billion to $40 billion. And here's the crazy part. Energy usage projections show that we are still in the early innings. We haven't even seen the full impact of AI adoption yet. Every chatbot, every AI model, every automated process requires energy and massive amounts of it. That means that this boom is sending ripples across the entire economy. Upstream into power generation materials, downstream into chips, semiconductors, and hardware. And by 2030, U.S. data centers alone are expected to consume 8.1% of the nation's total electricity. Now, to put that in perspective, that's more than double what they used in 2023. And the U.S. energy grid is not ready for it. According to Morgan Stanley, the nation faces a 36 gigawatt shortfall over the next 3 years, a gap larger than the entire energy capacity of many countries. In other words, the United States quite literally needs more power, or this AI revolution will stall before it even matures. Now, it is important to understand that the number of data centers does not tell the full story. Okay, the U.S. may have thousands, but China's, for example, are much larger. China only has around 449 data centers, yet its total power consumption is roughly the same. I think they're at 12 gigawatts, America's at 14. And that's because the facilities they're powering are much, much, much larger. In fact, China's energy usage per person now equals that of the European Union. That's up 350% just since the year 2000, and that is a staggering shift. It is showing just how aggressively China has scaled both its infrastructure and its industrial output. And this brings us to a critical truth, one we've been saying for months. Power will soon become the most valuable commodity on Earth. The energy boom is here and is likely to continue going forward. Every nation, every corporation, every developer building an AI is now in a global energy arms race. Governments are quietly stockpiling capacity, funding new grid projects, and fighting to secure long-term energy independence. And when you look at global data, China is far ahead of the U.S. in terms of new power generation. They've made power a strategic priority, not just an afterthought. One of the few perks of socialism, I guess, government planning. Now, we're already seeing the economic impact of this imbalance. Since ChatGPT's release in late 2022, electricity prices in the U.S. have risen more than 23%. And since 2020, prices are up over 40%, far outpacing what has been well above average inflation. And it's simple supply and demand. Energy demand is rising faster than we can produce it. This creates ripple effects across the entire economy, from household bills to industrial manufacturing costs. So how do we generate all of this power? Well, the answer many experts point to, and what we've been preaching for the last 3 years, is nuclear energy. Unlike solar or wind, nuclear plants run 24 hours a day, 7 days a week, perfectly matching AI's constant energy draw. They're also surprisingly efficient. Right now, nuclear power is among the most cost-effective energy sources on Earth at roughly $71 per megawatt hour. It is clean, it is consistent, it is scalable. The problem is that nuclear takes time, a lot of time. Large reactors can take a decade to build, and currently the United States has 0 of them under construction. Meanwhile, China is building 29 as we speak. So that means whoever finds a faster, safer, and cheaper way to produce reliable power, whether through small modular reactors, new grid tech, or some other alternative source, they will likely become one of the most valuable companies in the world. And people often ask, Ross, what's the next big thing? Everybody's focused on chips, on NVIDIA, on AI models and training efficiency. Folks, the next big thing is not smarter algorithms. It is the energy that powers them. Without the juice, nothing happens. And just look at the numbers. Alphabet, Amazon, Meta, Microsoft, OpenAI, they have collectively committed $800 billion for new data centers set to begin construction this year. A near $1 trillion of infrastructure spending from private companies, and every single bit of that depends on power. So yes, the next big thing must be power, and here's the final truth. Without far more electricity, this AI revolution simply cannot continue. No power, no progress. By 2035, AI data centers alone will be consuming 1,600 terawatt hours of power each year. That's about 4.5% of global electricity supply. Nearly 1 in every 20 watts produced on Earth is going to go to AI computations. So when people ask, what's the future? Is it AI or chips or robotics? Heck, I don't know, but I do know it's going to be energy. And energy will remain the most critical, most valuable, and soon most competitive resource on the planet. The next big thing, folks, is power. Don't overthink it. While the world is racing to build smarter machines, the smart investors are watching where the power flows. Don't miss what happens next. Tap the subscribe button, share this with someone who's following the AI trend, and let me know in the comments where you think the next big power play is coming from.